Well, let's see what kind of weird, I mean obscure, really obscurely interesting companies that Tracey Ryniec has uncovered for us.
You never know.
This edition of Hidden Gems,
That's
right?
right.
This first one here, I don't think we've had one in this industry yet.
No.
Bright Horizons Family Solutions.
Yeah, and when I saw that name, I was like, meh, it's elder care. I've covered those before. I'm not that excited.
I was going to say, it's not mail order families.
No,
Oh, okay.
But then when I, dug deeper, I was like, oh, it's daycare, the opposite thing. And then
Yes.
Bright Horizons, I have seen those around. They've been around since 1986, and they're mainly in Fortune 500 companies. So the ones that have like on-site daycare, or
Sure.
you see it at the bottom of an office building or that kind of thing, that's what they do.
Okay.
And it is a growing area. Even after all these years, the childcare issues keep changing and that whole industry keeps improving.
Yep.
So this is kind of an interesting play on it because I didn't even know you could invest in it in a public company. Estimates look real good here. I mean, slowly rising. This is what you want to see. Good earnings growth for this year, almost 20%, and then another double digits for next year. So this is still a growing industry as companies want to add more benefits to their workers, especially in a tight job market.
Yeah.
One of the benefits you can add is, some kind of in-house daycare or on-site kind of daycare. And so this is a good area to be in. I put up the price to consensus chart here so you can see that over the last 5 years, there's been just this slow, steady increase in the earnings. This is really what you want to see. This is a great chart for the price and consensus. Very consistent. It's getting those double-digit gains. And really, nobody's paying any attention, but the shares are up there near their highs. It is a growth stock, so you're not getting the value here. I think it's trading around 29 times or somewhere very high up there for me as a value investor, but if you're a growth investor, you really have to like this picture, and it's something you should kind of keep on your radar.
Okay. So from childcare, we move to the other end of the age spectrum for people who need endoscopic procedures.
Yes,
right?
which would be mainly colonoscopies.
Right. I wanted you to say that.
We don't want to go into these things. They're very, sensitive, but
Talking about CRH Medical Corp.
yes, and they went public. This is kind of opposite of Bright Horizons. They went public only 2 years ago in 2015, so they're relatively new, and they've only gotten into the anesthesia side, which is where they are, only a couple of years ago, but they're seeing the growth in that. So this is one of those medical companies that keeps acquiring other little medical companies, and that's how they grow.
Okay.
And then it gets them into new areas, geographic areas. So key is getting into physician networks.
Right.
So they're getting in other companies that have different physician networks that then it covers the anesthesia. But I didn't realize, although I should have, 20 years ago, nobody really would have been talking about getting a colonoscopy. It would have been somewhat rare, and the percentage of people who are now getting them is risen dramatically.
Well, I mean, every time you talk to the doctor after a certain age, it's all they're pushing.
Right. But that is where these guys come in because they're expecting in a couple of years up to 80% of people over, say, the age of 50 will be getting fairly routine colonoscopies. It is a preventative measure, and that's why they're really pushing it.
Right.
So someone like this, that is kind of where you want to be in. Now, there's only a couple of analysts covering this, which is why it's a hidden gem. So we don't have a ton of data for next year. You see these NAs. I don't see this very often on Zacks.com. That just means the analysts haven't given us anything yet for the following year. But this year, there's a couple analysts here. The consensus is at 21 cents. It's as high as 28 on from the data that we're getting. They made 14 cents last year, so that's a nice growth in the earnings there. And as they acquire more of these physician groups, the analysts expect the growth to be there. They're just not telling us yet what they think for 2018.
Sure.
But I am expecting, that to still be the growth trajectory for the following year too.
Maybe they're all out having colonoscopies.
Maybe.
Who knows, right?
I put up the chart, but since they only just went public, it's kind of weird. They started off real hot there, sold off. They have been on the rebound, though, and some of the analysts are putting them, up over $10 here. It is an under $10 stock. I know people like those. So if you're looking for a growth play, under $10, Has the rising earnings estimates. Again, it's not cheap. I think it's also trading around 30 times. But this is an interesting little niche in the medical side.
To say the least.
Yes.
Do you own either one of these?
I do not.
All right. You can check out more stock information, and I'll leave it at that, on our website, Zacks.com. Just get on over to the homepage and link to it all from there. With Tracey, I'm Terry Ruffalo.